When you look at the magnitude of some of the cost increases on certain categories of items that are imported, it's more than what retailers can bear, it's more than what suppliers can bear, and so we'll work hard to try to keep prices low, but it's unavoidable that you're going to see some prices go up on certain items.
That was Walmart CFO John David Rady telling us on this program tariffs will make price increases unavoidable. Meantime, President Trump says Walmart should eat the tariffs and not raise prices for consumers. Joining me now on this, Stacey Widlitz, SW Retail Advisors President. Stacey, great to have you this morning. Thank you for joining us. I think the key question ahead of earnings from the likes of Home Depot and Target later this week is, what does Walmart signaling an increase in prices mean for those other retailers? Does it give them a free pass this week?
Well, I think we know that prices are going up across the board, and that is tough for companies. And for Walmart, of course, they are the biggest and they have the most power to push back on vendors and share that cost, to not pass it all of it on to the consumer. That's what we saw back years ago when we had tariff increases, and I think that's what we'll see again. So they offer the best value in the market. But I think, you've heard from companies across the board that we will see prices go up, absolutely. And the consumer is still being very choiceful, and that will eat into discretionary, no doubt.
And we're also hearing from the president. He talked about over the weekend on X the idea that Walmart should just eat into their own profit margins to stop these price increases from hitting consumers. Walk us through that. And this is something that obviously as investors we know really well. You never want a company to eat into their profit margins, but just talk to me about that potential move forward for Walmart. If they did cut into their own profit margins to cover the cost of tariffs, what would that mean for them?
Well, I don't think that's going to happen. It's a nice idea, but Walmart is not going to take a hit on its operating margin that it's worked so hard to get where it is. And also, by the way, their e-commerce is now profitable. So I think that's unlikely. I think what is more likely, again, is that they're going to be able to press vendors increasingly to say, do better, do better. And the vendors are actually the ones who are going to be more under pressure than Walmart. And yes, of course, they'll pass a little forward. Other retailers don't have that same kind of power to push back. So I think Walmart's going to be one of your top performers this year.
Yeah, so let's go on the opposite end of that. Who is most at risk because they don't necessarily have that negotiating power with their vendors that you just mentioned?
I would say you continue to look at the department store space. You look at specialty. You look at someone like Kohl's that's been in perpetual turnaround, that is just not really getting anywhere. That it's likely that some of their vendors will start to say, "Hey, is this where we want to be? Can they really push price increases through to the customer? Do they really want to shop here?" So I think that'll continue to be under pressure. On the flip side, on the more positive side, we're going to hear from TJX this week. Home goods continues to be on fire. If you're not building a home or buying a new home, you're upgrading your home. And that's what TJX in home goods offers. We'll hear from other retailers like Urban Outfitters. Anthropologie margins are still really strong. Little to no discounts there, and customers are still responding to merchandise. So there's definitely stories out there. Deckers, of course, with Hoka, that stock came way down. The DTC numbers there look intact, margins look intact. And of course, Ralph Lauren has been just selling full price, hasn't discounted, and is still sticking to that. So there are plenty of opportunities out there.
And Stacey, I want to end on Target. How are you thinking about their earnings this week? What do you think the story is going to be?
Well, Target they've struggled to find the right balance. And last quarter, they returned back to promoting, and I think we'll see a little bit more of that. This quarter, I think, discretionary got a little bit better, but it's still weak. They're still not doing anything like Walmart's doing. They're not seeing the same traffic increases. But if you look at the opportunity for them, if Kohl's continues to struggle, that is one of their biggest competitors. What Target has going for them is the traffic driving food options. So if they can continue, they have an opportunity to continue to take share from Kohl's. And if they can execute, the stock is worth a look. But so far, they haven't been able to gain the kind of share from Kohl's that they should be.
Really great point, Stacey. Thank you so much for making time for us. Appreciate it.
Good to see you.